Hello, this is Avra. I will be here with you for a few minutes to have a short review on US personal income and spending data and its effect on financial markets. Let's first check the data and see the numbers, and then we will see the effect on the market. So far in the data, we can see that personal spending increased by 0.2% in April, which is much lower than 0.7% in March and 0.3% estimates. What make this data, this number very important? Because while you have a less income, you can spend less, and while when you can spend less, it means that we will have a less demand in the market, and it can help the inflation to fall faster. So lower personal spending means lower inflation in next months, in upcoming months. But core PC price index and PC price index both, not both. The PC price index increased by 0.3%. Both we were expecting to see the 0.3% growth for both of them, but PC price index increased by 0.3% in April, and core PC price index increased a little bit slower, 0.2% in April in a monthly base, but still in annual case, both of them they maintained they maintained at 2.8% and 2.7% the same number as they had in the previous month. So both of them, so the core inflation and the headline inflation for personal spending, both of them had no change from the previous month. Yeah, they were in line with estimates. They didn't shock the market. They didn't have any surprise, but at the same time, inflation did not decrease. So that supports somehow the Fed members that they were telling in the previous days that inflation will have a long way to fall further. So these data at the first glance can be positive, but if you go deeper, if you go to data much closer, you can see that despite some positive view, despite some optimistic, still we should be worried about the future of inflation. So, but at the same time, it also means that inflation somehow is under control. So while it's under control, but it will take longer to fall further. That means that's the meaning of these numbers in the chart. If you go to CME Group tools, FedWatch tools, we can see that yesterday, just day before, for its September meeting, estimates expectations for holding the rates at 5.25% till between 5.25 and 5.50. It was 53%. So holding the rates idea had more than 50%, about 53%. Cutting 25 BPS, 0.25 percentage rates, cutting the rate by 0.25% had about 43% chance. Now it has more than 46% chance. So that means these data somehow showing a little bit dovish review and estimate on the Fed possible reactions and Fed possible actions actually in the next meeting. Actually, not in the next meeting, in September meeting, because for June and for July, for both of them, still we do not expect any rate cut. Only rate cut, the first rate cut, possible rate cut will be in September. And now still holding the rates still have a more chance, but it is less than yesterday, less than a week ago. So it means a little bit something, or somehow the dovish outlook on the Fed actions. So by this outlook on this Fed, but by this outlook on the Fed reactions, we can see just a moment. Let me bring the sorry, just a moment. Let me bring the chart here. Okay. Let me bring this teacher. Let's review okay, here is my chart. Let's see what means this. Okay. Okay, this is the chart, and if we go further and see the reaction, the market reaction, first let's find the US dollar index. US dollar index. So these data, first of all, as we have a more chance for rate cut compared to days before, it can pressure the US dollar a little bit. So that's why you can see the US dollar is a little bit lower. But as I told, still at the same time, it means that the US dollar, it means that the inflation still will have a longer way to fall further. So US dollar, despite some decrease today and yesterday, still it's about much higher than 104 marks, which means the still dollar index is strong, and we do not expect much more fall for now. Yeah, it cannot increase as well, but it cannot fall so far as well, which means that the side movement between 104 and 105 or around 105 will be more expected for the next days and the next weeks. Same things we can see in the stock markets. If you go further and see the US 500 chart, yeah, it is increasing today a little bit, but still as much as even if yeah, but if you check at the Monday opening at 5,300, around 5,300, it has a long way to go further towards 5,300. So which means that despite some growth today, still the overall downtrend that we had in the previous week and this week and last days of the previous week, the overall slow downtrend is still here and continues, and we do not expect trend changing for so far. As I told, data were somehow optimistic, but they do not confirm that the faster rate cut, or they do not confirm that inflation is falling much faster. They just couldn't somehow confirm that inflation a little bit under control, and it doesn't have a surprise for the market, so it's still the same number that we had previous month. So which means that increasing in the stock market cannot go further. Falling in US dollar index chart, weaker US dollar index also is not in radars. So we don't see any further fall in a US dollar chart. This is the data and you're affecting the chart, but still, as I told, it cannot support faster fall in the stock markets, and it cannot support higher increase in US dollar chart. But at the same time, it cannot also pressure so much on US dollar, or it cannot, it means that the further expected falling in the stock market will not be so fast. So it will be slowly. But overall, slow down trend didn't change in the stock markets, and overall stronger US dollar compared to other currencies also did not change so far. If we had surprise number, yeah, this picture could be changed, but the number, they had no surprise. If you have any question, please don't forget to write down under this video on Instagram or YouTube. I'll try to get back to you as soon as possible. See you. Bye.